Welcome back to the Eric Krown crypto channel, and a very special day today as I wanted to go over a back-tested strategy that you can use to hopefully avoid getting fucking wrecked, which is of course the name of the game. Anyways, whenever I see one of these tournaments go up, in this case, it's going to be ByBit hosting a trading tournament, I always, I feel responsible in a sense to provide some sort of structure, some sort of a back-tested strategy that I can then give out to people who are potentially going to participate in such things, because I understand, and of course, exchanges, their business is to, remain in business, but I understand that these sort of tournaments are there to incentivize you, the trader, to essentially do stupid shit, which means that you rack up more and more trading fees, which means that the exchange makes more and more money. And of course, that's fair, fair play to the exchange. But in this case, I wanted to be providing yet another setup because it's my moral conscience, really. But at the same time, I will be having an affiliate link to this tournament as well, being that I do have an affiliate with ByBit. So you can use this for yourself. I would strongly recommend that you, backtest it as well yourself, iterate upon it if you so desire, and I'll even show you, some potential optimization considerations for this particular setup. So without further ado, let's just jump right into it. And of course, the old shill link is in the description below, but let's start it off right on over here with the trade strategy and checklist, which is essentially the blueprint for whatever we're going to be doing. So in this case, going to be using the 5-minute time frame. Can you use this on other time frames? Yes, fucking obviously, but maybe backtest because the results will be different, of course. Anyways, we're going to be using the 5-minute Joule or Joule Light as the source of edge, as well as PMARP. What defines a risk management parameter? We want to see a closure below the range lows using the Lux algo. In this case, I think it just makes it a little bit easier because I do understand that perhaps there are some people out there who do not know how to define range lows. And the emergency would be emergency condition, which means that if hit on price action, then immediately out, no waiting for closures or any bullshit like that, just immediately out. And that would have to be with a wick below the prior trend lower low. Now, didn't happen once in backtesting, and I backtested this one more than this tranche of iterations, but always needs to be in there. Black swans will inevitably be happening, and don't want to be caught on the wrong end of a girthy red dildo if and when that does happen. Anyways, how positions be entered? Well, the Joule Light needs to be below 35, and then the Joule Light with the first tick white upon closure will be the entry. And that's the way that this data was back tested. Now, I'm going to say straight at the outset right here, if you enter in that way, you can still trust in the statistics. I mean, the statistics are as they are, and they're still good enough, but it will not be optimized. 100% not optimized. I will show you how to do better in that case. Anyways, how positions be exited? Well, PMARP above 75 percentile on closure is going to be the condition for that to get out of the position. And then I included some optimization considerations over here. So when we go through the actual quant data, you can see some of these numbers, obviously, but ultimately, at the outset, you could employ many different techniques to optimize this. Now, first, you could do what's called taking profit intra-candle when the PMARP levels are hit, meaning that you don't wait for closure at 75 percentile. You just immediately take it off, or at least some off, when that level is hit. You could also take profit based off of the quant percentages. So on the average percentage gain, you could have take profits there, or even around the peripheries of the first standard deviation. You could also do risk management based off of the average loss in terms of time. There is going to be usually greater time in the trade for the losing trades versus the winning trades. So basically, the longer that it goes on, the more and more likely it's to be a loss, which means probably better to just close it, take the loss right there like a man, just bend over and take it like a man. And then this next one is very, very important for entry optimization. Again, you can take this much further. In fact, several guys in the quant program have actually, really taken upon themselves. Like, shout out to M. Lingy right there. Like, that guy's really fucking doing it, as are several others as well. I don't want to take anything away from them, with, backtesting the data in much more specific ways, to come up with, slight variations, but they do produce better results. Anyways, so you could enter between the prior low and the actual signal. So that means when the official setup hits, you don't enter. You actually wait for price to come down a little bit more towards that prior low, but it gives that sort of green light to be looking for that next. All right, sweet. So I'm just going to briefly show you what the backtested data shows for this one over the past 50 iterations. We'll go through 10 ourselves as well, or just as much as time allows for. But here it is. Here's the first. Sorry, I should also denote, this one does get entries very often. I mean, we're talking about when this data was backtested for the most recent tranche, this was in the last portion of November, one of the lowest of the low volatile times in Bitcoin's history, like quite literally the fucking basement. Even during that time, within 9 days, 50 iterations happened, which is, you know, pretty fucking good. Anyways, so I'll scroll through the data over here. I'll show you the most interesting points of reference. One of them is going to be the win rate. So out of 50 iterations, 44 were winners. Pretty fucking good, to be fair. Now, I will say the P&L's very small because obviously the volatility of this asset was very, very low. So we do expect that when the market does pick up again, that these numbers will be greater. That would be an intuitive extrapolation. Anyways, that would give it a 88% win rate. I would expect that to go down. That's very fucking high. Again, past results are not indicative of future returns, but you know, even anything above 70, I consider as very good. Anyways, in terms of the time taken on average for the winning trades, it was 45 minutes about versus the time on the losing trades, which was just over 70 minutes. So again, the longer that this one takes, especially above an hour, the more likely it is to be a loser. Moving on to the next, I think more interesting pieces of data. This is the average percentage gain on the winners. So I do measure the raw P&Ls right here for the wins and losses right here, as you can see, but I don't look at that as too relevant. What I look at as more relevant is the average P&L gained versus the average P&L lost in percentage terms. And on the win side, it was 0.27%. And again, this is with no optimizations, none at all, because obviously the average losing percent at almost 0.5%, you know, makes it obviously less attractive. We can obviously get that. We can get this number down and we can get this number up, most importantly, with that last optimization that I put in over here. Anyways, going back to the actual data, the first standard deviation for the win side was extremely low to about 0.5%, and for the loss side, extremely low to almost 0.75%. I also went over a min-max as well for the actual data, and you can see the numbers right there. In fact, the biggest winner was greater than the biggest loser, which I thought was also interesting, potentially of note. Anyways, I've allowed for 10 more iterations right here, which we'll just go through together, and let's just start it off with this first one. Well, this first one actually did fire off right here. So let me mark off the areas on the Jewel Light and then also on the PMARP. So anything below 35 is what we're interested in, and on PMARP, anything at 75 percentile is what we're interested in as well. So this is the way that the data was backtested. Let me get rid of this one, not relevant towards this particular strategy. Anyways, well, this first iteration, we did get an entry right here, yes, but we don't really have an exit just yet, so it's not helpful to record at this moment. Let's go to the last one that was relevant. So that would be over here. All right, and this one actually perfectly illustrates my point. So the official entry obviously happened right here. We got our first tick of white, and so the white is at the top left-hand side. Theoretically, you could front run that as well, but you will have a higher loss rate, obviously. And at that point, that initiates the next condition, which is to look for a test somewhere around the range lows, anywhere between the current official entry and the range lows. Where are the range lows? Well, we can use the Lux algo to define the support and resistance. It's not going to be perfect. If you know how to do support and resistance yourself, it's probably going to be better, but it's good enough. By the way, you can find this indicator here. Lux algo, just type it in. There it is. This one, support and resistance levels with breaks, got over 13,000 likes at the time of this recording. And the PMARP is also freely available here as well. Same thing, by the way, it's default settings, because I know I'm going to get that question. Here you go, before I get like 50 emails. 20 VWMA, 350 look back, and PMARP right there, okay? That's all you need to know. All right, so leave our lovely support ladies alone. They don't know this stuff. They're not trained in this way. Anyway, so basically anywhere between this and the range lows, the prior ones, the most recent ones, this blue level right here is fair game. So all of this, that could be averaged out into an entry. And as you can see, price action comes back down and retests around this region several times between the official entry and the trade actually playing out. So So, you can see that you can get a better average entry, because over here, the official entry would have been 17,762, which I'll write down. And again, this is the way that I backtested it. So I backtested it with like the worst, 762, boom. Okay. And then of course, from there to the lows, you could be averaging it anywhere between 17,745 basically, which does give you several opportunities for that. So, these numbers are small, but it does matter over time. Obviously, even, just the smallest percent increase is going to make worlds of difference over a long period of time, especially when you're getting like 50 trades over the course of 9 to 10 days, for fuck's sake. Anyways, yes. So again, what's risk management? It would be right here. This circle, any sort of a closure below there, out, take the fucking loss. At least that's the way that the data was back tested. And so you can see, obviously it tests down around there. That's fine. Does not close below there. And then after that, PMARP levels are hit over here. So that would be 17,793. 17. Boom. All right. Need to get the data in here. Boom, boom. This was a win, so I type in a 1. I measure the time taken. So the time on this one from official entry to exit was 80 minutes. So that's 80 minutes, a little bit on the upper end of this one, to be fair. Oh, whoops, wrong pane. Okay, there we go. And there we go. All right, let's move on to the next one, because that one was pretty straightforward. You can see the nuances in play right there. You can also see, how just looking at the quant data and kind of managing off of that is also very viable in this case. Anyway, so let's go to the next one. Oh, what do you know? It's actually the prior one over here. So when do we officially see it turn white on closure? That would be right here, of course. And let me just get rid of this because it's annoying and getting in the way. So this would have told you to long right here, 17,774. And I will record the data like this, 17,774, because I want to know the worst. I want to know the worst, no optimizations. Where's the prior range low? Well, the prior blue line would be coming in from this area. So anywhere between the official entry in this area over here, fair game to average in, as again, it will lower your losses and increase your gains. So, you don't see it retest exactly into the prior range lows. So that is, a risk that you do run into. You might not get full fills if that's what you're looking for, but it does definitely test, I would say significantly lower, as it does come all the way down another 50 or so bucks. Yeah, it comes down about 50 or so bucks on this wick low right here. So that would have been, very attractive. Anyways, obviously risk management doesn't even get tested. So fair enough. And then take profit is hit over here, which is 17,804. So I'll write that in, 17,804. All right. So 1, and let's measure this one out. You can definitely see on this, it's 45 minutes, which is right on the average for the data. All right. And there we go. Nice. On to the next one. All right. Let's see. Do we have another one right here? This is a good nuanced example. So this one right here, you see that it turns white when it's kind of slightly below the green horizontal bar, but on the closure, look at the top left-hand side. What number is it? 37.1. That is obviously greater than 35, meaning no entries. So while this one, admittedly actually would have been bad. So it would have told you to long the range highs, and then gets you a loss right here soon after that. This would have not been a trade, although we do expect losses. But let's go to the next one. Okay, we have this one over here. This one's pretty cut and dry yet again. Right there is the official entry. In this case, 17,659. 17,659. Boom. It's going to be the number. But if you were to average your entry between the range lows and the official entry, well, you don't get a chance on this one. So if you were to wait, wouldn't have obviously entered. So again, that is the risk that you do run if you do employ that optimization. So it might be a consideration to split up, entries and whatnot. Definitely possible. Anyways, after that, hits the take profit right here, 17,720. Okay. All right, so that's a $61 gainer. Happens relatively fast. Let's see how fast exactly. 35 minutes, so a little bit under the average, but definitely within the scope of the data, which is a good sign. All right, on to the next one. Number 54. Let's see, do we have another entry over here? We do. All right, So here we go. Boom, first tick white. Where's our range lows? In this case, it's much, much lower. This is why you actually should probably know how to define range lows and range highs, because if you do know how to do that, then you also probably understand that your real range lows are coming in around here, which is a good signal. Like if your range lows are significantly lower than where your entry is, probably not worth taking this one, at least in my opinion. Now this one does admittedly give you a win. It's a very slight win, but I don't think that these ones are honestly worth it. So this one was 17,768. Did I already write that down? 17. Okay, entry. Exit would be right here, 17,823. All right. All right, so another $55 or so. This one, again, happening relatively fast. I'm gonna guess like 40 minutes. 45 minutes, right on the fucking average, huh? Funny how that works. Okay, there we go, boom. All right, we need to find some losses because again, this strategy will produce losses. Definitely 100% does happen, I can assure you of that. Oh, we have our next entry over here. This one's gonna be another fucking gainer, which is weird. You know, this one's saying 17,127, okay. 17,127, boom. And again, another example where it does not retest the range lows. So waiting for that would have, you know, not been beneficial. Exit is right here, PMERP levels hit, okay, 17,153. All right, just $26, so pretty muted on that end, obviously. And this one's like 15 minutes, so very quick trade in terms of time. All right, we need to find some losses though. I do not want this to look like you don't fucking lose, because you will. You will fucking lose using this 100%. I can assure you of that. We have an example kind of right here. Okay, I will explain to you why you should not take a loss on this one. Oh yes, no, yes, okay, good. You can take a loss on this one. Okay, nice. Yes, you're fucking losing it, baby. You're losing everything right here. All right, so here's your first tick white. That obviously happens right here. You're very close to the range lows. So, you know, to be fair, this is kind of the perfect setup that we want. You know, we want to be entering in as close to the range lows as possible, because then our risk is inherently lower. Obviously, our risk is going to be coming in from this range low right here. It breaks below right here on closure, 17,136. But let me actually write in first the entry, 17,154. Okay, 17,154. Okay. Exit is going to be right here, 17,136. All right. All right, it's a loss. And how long does this one take? This one takes, it's very quick, actually, 25 minutes. 25, boom. We want this here, yes, and that there. Yes, there we go. So even the loss is a little bit less on this in this case as well thus far. After that, you don't really get another signal until here. But if you're already closing below the range lows and the entry again is going to be very close to the range lows, you ignore these. It's not until it's like, you know, a little bit further away, which does actually happen soon after that, which is right here. Right here. Yeah. So you do get this one right here. Boom. Or you actually even get it right here, I would say, because like you're closing, you know, decently below, I'd say, open and closure below. At any rate, both of these work. And again, I'll just take the first one, 17,125. Okay. Boom, 17,125. Where's our exit? 17,150. Very small moves, but not much else you can do when the market's slow as fuck. So I'm just like, all right. And we basically recoup our loss from the prior failed trade. 85 minutes on this one. Boom. Okay. And there we go. All right. All right, we need to find another loser though, because usually it's not so easy as this one. Like, should be worse. Shit should be worse. Here we go. Well, it's not going to be a loss either. Okay, we have our first tick white over here. Boom. 16,993. Alrighty. And this one does head lower, so averaging in lower would have been easier. But as you can see, you know, if you're going off of the Lux algo, it's going to say your range lows are all the way over here. Obviously, they're a little bit higher than that in this case, but I'll just go with, you know, what this one's going, or sorry, what this one's giving at this moment. And we got our exit, yeah, here at 75, so 17,007. So basically no gain. This is why it would have been wise to wait. I mean, 14 bucks. It would have been wise to wait to average a little bit lower. You know, more often than not is going to do that, like significantly more often than not. Anyways, this one looks like it takes about an hour and 35 actually. So it's going to be 95 minutes. All right, boom, boom. There we go. Let's just do a couple more and call it a day. Alrighty. Okay, we have this one over here. Okay. Again, comes off of a nice little pump off the lows. And this is another good nuanced situation. So you do turn white on this particular one right here, but as soon as it turns white, it's already above the top, the take profit. So it's not worth one taking, and I would not add this one to the data, even though you could have gotten out at, you know, a bit of a win there. I would have not considered that an entry for this data. All right, we have another one over here. Okay, below 35. All right, turns white, boom, get it right there. Where's your range lows? Right here. This is a perfect example of waiting for a retest around the range lows. In this case, you do get it. So averaging in there would have been great. And then our exit would have been over here, 16,926. So let me write it down, 16,908, 16,908, 16,926. Okay, very small move. Again, very fucking low volatility, like obnoxiously low. 55 minutes, and we'll do one more iteration after this. So we're already 20 minutes into this bitch. All right, here we go. All right, one last one. Let's find a loser. Okay, this one should be a loser. Yeah, this one. Yeah, we have several losers here. All right, we got so many losers. Let me just pull back a little bit. Yeah, okay. Yeah, so we don't really have too much going on. Like, we could pull from these highs basically if we really wanted. And honestly, that's probably what you should do, or just these range lows right here would also be sufficient. But we get our first sort of white tick right here. Okay, 16,980. All right, 16,980. Okay. Actually gives you a few other entries after that. I mean, kind of. But obviously this one does close below range lows. And this is, again, why it's very important to understand, you know, how to actually define range lows, because this one should actually be two losses, not one continuous loss. In this case, exit's going to be 16,876. So 16,876. Yes, this is a bigger loss right there, probably the biggest one. That, yeah, that's a little bit above the average of the data, but of course that will happen. But I'd much rather take this loss right here and get positioned for the next one coming in a little bit later to recoup some of that back. So that would have been 120. What was it? 215. Okay, so 135. Time. All right. Hey. And let's put that into the data right there and right there. And there we go. So this, by the way, the stats here are not updated now. I need to change this, but we can do that very quickly. Just go 3, 1. Yes, there we go. Okay, 3, 1. Okay, 3. Sorry, I'm just very OCD about this. 3, 1. Okay, I just want to include all of this. 3, 1. All right. 3. Even this should probably tick up just because no, it actually ticked down. Because the very recent entries were a little bit better. This one definitely ticked down though. Anyways, yeah, from there, you know, you probably get it. So again, there's many optimization considerations that you can make for yourself. I just kind of providing a few generic ones right there, which, you know, typically are going to provide a bit of a better result. But I would still, again, say that if you are intent on using this, backtest it yourself. Don't just trust me, verify it yourself. You've seen how it works. You can obviously do it yourself as well. And then the keys are in, you know, in your hands, obviously. And you'll be the master of whatever sort of optimizations that you make for yourself, and the authority of that, of course, as well, which you'll know better than me because I probably haven't tried it, or maybe I haven't tried it. Other than that, again, if you are going to be participating in these sort of tournaments, which I will have a link in the description below, please do understand they are there most importantly to make money for the exchanges by promoting you to trade more often. So if you are going to employ a strategy like this, do understand that, You know, you kind of have to be consistent with it, obviously. But giving into the urges of, of basically trading like a fucking moron, well, probably not going to work all that well. So guard yourself against that. If you can't do that, I would strongly urge you not to do this. I mean, I'm not your fucking dad here telling you what to do, but if you are going to enter into a tournament like this, I would strongly suggest that if you're not going to use a strategy like I'm providing over here, make your own and backtest it in the way at least that I'm showing here, so that you can, of course, verify that whatever the fuck that you're considering using is worthwhile, for example. Anyways, that's going to do it for me. I want to be wishing you the best as always. Take care, much love, and see you hopefully soon.